You're tuned in to the Deep Dive. Today, we're heading up to northern Idaho, taking a close look at the retail market in Coeur d'Alene.
And that's pronounced Coeur d'Alene, just so everyone's clear.
Right, Coeur d'Alene. We've got our hands on a recent retail market report zeroing in on data right up to the first quarter of 2025.
Yeah, pretty fresh data.
Exactly. So, our mission today, pull out the really important stuff, the key takeaways about how healthy the Coeur d'Alene retail scene is looking in early 2025.
Give you that quick but, thorough picture.
And honestly, some of the first numbers we saw were pretty striking.
Oh, yeah. Like what?
Like a vacancy rate that's incredibly low, and get this, zero new retail space under construction right now.
Oh, zero. Okay.
And on top of that, rents are growing faster year over year than the U.S. average.
Okay, so definitely a lot to unpack there. Where should we start? The vacancy seems like a big one.
Let's do it. So the overall market vacancy is sitting at just 1.3% as we look at the data leading into Q2 2025.
1.3%. That is exceptionally low for retail. Really tight.
It really is. And it actually dipped slightly over the past year, down about 0.03%.
So it's not just low, it's been trending slightly lower, or at least staying very stable at that low level.
Exactly. And if you compare that to the longer-term averages, like the 5-year average was 1.5%.
Okay, still low?
And the 10-year average was 2.3%. So 1.3% is significantly tighter than what we've seen historically.
Yeah, that really puts it in perspective. It signals, very strong demand for the space that's actually there.
And it's low across the board, pretty much.
Yeah.
If you break it down by the type of retail center.
Right, like strip malls versus power centers.
Yeah. Neighborhood centers are at 2.0%, but power centers, 0% vacancy.
Nothing available in power centers.
Okay. Malls, also 0% vacancy.
Wow.
Strip centers are incredibly tight, just 0.2%.
Barely anything.
And even general retail is only at 1.2%.
Yeah.
It really shows that demand is high across all these different formats.
So basically finding any kind of retail space in Coeur d'Alene in early 2025 was a real challenge.
Definitely. The total available space is only around 180,000 square feet, with an availability rate of 1.5%. Not much wiggle room.
Which leads perfectly into the next point you mentioned, the construction pipeline. Or lack thereof.
Exactly. 0 square feet of new retail under construction as of Q2 2025. None.
That's the stat that really jumps out,
Yeah.
especially when you compare it to the history.
Right. The 10-year average for space under construction is around 30,000 square feet.
So going from an average of 30,000 square feet being built to absolutely nothing, that's a significant shift.
It really is, especially considering the overall retail inventory is pretty substantial, about 11.8 million square feet.
So there's a decent amount of existing space, but absolutely no new supply coming online to meet that obviously high demand indicated by the low vacancy.
Precisely. It makes you wonder what's holding back development. Is it land costs, construction costs, permitting?
Could be any number of things or a combination, but the result is this really constrained supply situation.
Which naturally has an impact on rents.
You'd expect it to. With vacancies so low and no new competition being built, landlords probably feel they have more pricing power.
And the numbers bear that out. The market asking rent is around $18.30 per square foot.
Okay.
But the key thing is the growth. Year-over-year rent growth in Coeur d'Alene was 2.3%.
And how does that compare nationally?
Well, the national average for the same period was 1.8%, so Coeur d'Alene is outpacing the rest of the country.
Right. That 2.3% confirms the pressure we're talking about. Limited space, strong demand, rents go up. Makes sense.
And that growth isn't just a recent blip either. The 5-year average annual rent growth is 4.0%.
4% average over 5 years, that's quite strong.
And even the 10-year average is 3.3%. So this upward trend in rents has been happening for a while, but it's still notable right now.
Definitely. It fits with the broader picture of Coeur d'Alene too, doesn't it? I mean, the area's seen a lot of growth, population-wise.
Absolutely. It's grown as a metro area, more tourism. Idaho generally has seen huge population growth, lots of people moving in, especially from places like California.
And that influx puts pressure on everything, housing, cost of living, and commercial space too.
We hear about apartment supply growing, but maybe not keeping pace with retail demand, it seems.
Interesting dynamic. So even with things being so tight, there was still some leasing activity happening in the first quarter of 2025, right? People were finding some spaces.
Yes, absolutely. Looking specifically at Q1 activity gives us a good sense of what was moving. Net absorption over the last year was positive, though maybe not huge, around 3,100 square feet absorbed.
Okay, so some movement.
But the individual leases in Q1 are interesting. For example, over on East Appleway Avenue in Greater Coeur d'Alene, there were actually 2 separate leases signed, both for exactly 3,770 square feet.
Interesting. Same size, same building maybe?
Looks like it, yeah. And then in the Coeur d'Alene CBD on East Sherman Avenue, a place called Henry Griffiths leased 3,728 square feet.
Okay, so decent-sized deals still happening.
Yeah, and others too, like 2,211 square feet on North 4th Street, 2,000 square feet also on North 4th, but in the CBD. 1,400 square feet on East Niter, 1,420 up in Hayden-Dalton Gardens on Government Way.
So activity across different areas, different submarkets.
Exactly. Even out in Post Falls, at the Promenade, a 1,552 square foot lease. And another one on West Kathleen for 1,490 square feet.
So the takeaway is, while space was scarce, businesses were definitely active in Q1, snapping up what did become available.
Precisely. Now, what about sales? Buying and selling retail properties. The Q1 data is a bit thinner here.
Yeah, sometimes sales data lags, or there just aren't many transactions in a single quarter.
Right. Over the past year, though, leading up to the end of Q1, the report says 46 retail properties traded hands.
Okay, 46 properties over 12 months.
With a total sales volume around $7.7 million. The average market price is estimated at about $178 per square foot.
178 to foot, okay. And any sense of cap rates?
The estimated market cap rate is around 7.7%.
7.7%. All right.
But focusing just on Q1 2025, there was one main sale highlighted, a property out on East Celtis Way.
Okay, what about it?
It sold towards the end of March for just under $2 million. $1,980,000 to be exact. That worked out to about $297 per square foot.
Whoa, that's quite a bit higher than the average $178 you mentioned.
It is. And the cap rate was lower too, 6.3%. But here's the interesting part. The report notes it had 42.6% vacancy at the time of sale.
Ah, okay. So much higher vacancy than the market overall. That explains the higher price per square foot and lower cap rate, potentially.
Maybe a value-add opportunity. Buyer saw potential to lease it up.
Exactly. Paying more per foot now for the potential upside later. So even with just one big Q1 sale noted, it tells an interesting story. Investors are still interested, maybe looking for specific kinds of opportunities.
Yeah, seems like it. So let's try and pull this all together for everyone listening. What's the main story of Coeur d'Alene retail in early 2025?
I think the word is tight. Extremely tight. You've got vacancies scraping the bottom, almost non-existent in some segments.
Right. Rents are climbing steadily, faster than the national pace.
And crucially, no new supply being built at all, despite all the signs of strong demand.
It paints a picture of, well, a landlord's market, arguably. High occupancy, rising income potential.
Definitely. And for retailers looking to get in or expand, a real challenge. Limited options, higher costs.
So that lack of construction, it really feels like the most provocative point here.
It really is. It begs the question, what happens next? Why isn't development happening in response to these conditions?
And what does that mean long term? If new supply stays constrained, does that eventually stifle retail growth? Does it limit options for consumers?
That's the big question mark, isn't it? Will this lack of new building continue? And what are the knock-on effects for businesses, for residents, for the whole feel of the retail scene there?
It's definitely something we'll need to keep watching. A fascinating situation.
Absolutely.
And look, if you're listening and this Coeur d'Alene market is particularly relevant to you and you want even more detail than we covered today.
Yeah, maybe specific property types or submarket nuances.
The report mentions you can reach out to Eric Peterson for more information. His number is 509-903-9077.
Great. Well, that wraps up our deep dive into the Coeur d'Alene retail market for early 2025. Thanks for joining.